Hey everyone, Kevin here. You may have heard about something called the Paycheck Protection Program. Basically, another way to get free money from the CARES Act and stimulus package. And the theory is if you borrow money through the Paycheck Protection Program, you could get a forgivable loan. In other words, here's $100,000 to support your business, and as long as you follow some simple rules, you won't have to owe that $100,000 back. That sounds nice. I like free money, especially during a crazy time where a lot of our businesses are shut down, we're stuck inside. I haven't even been able to get out and go show houses as a real estate broker until just the last 2 days when they finally started loosening things again. So there's a lot of madness out there, and there's also a lot of madness in the endless barrage of acronyms that we hear. We know we've got the EIDL, we've got the PPP, and we got a million of other acronyms. This video is to walk you through not only a quick summary as to what the PPP is, but then most importantly, tell you about the 5 big downfalls and risks and how you can avoid being a victim of those risks, because you're gonna be really pissed off in 4 to 6 to 12 months if you're not careful with some of the downfalls here. Let's talk. So here's the scoop. If you're a small business, first things first, you wanna make sure you put in your application for your grant money. That's your EIDL application. If you have not done that yet, put your application in there. It's $1,000 per employee up to 10 employees. That's out of the way. Now PPP. The PPP is the program where you can get money to cover payroll costs, mortgage costs, and certain other expenses like rents and utilities. Generally, the loan is calculated by taking whatever your average payroll was and multiplying it by 2.5 times. So I applied through Chase and this online application portal Veem. I applied through both of these, and at Chase, for example, I was simply asked, how much is your average payroll over the last few months? It didn't even specify an exact time frame, it just said, what's your average payroll? And I put in $40,000, and the program automatically spit out, looks like you should qualify for a $55,000 loan. How are you going to spend that? And then you wanna break down your spending 75% towards payroll and 25% towards all of the other things. The online application process is pretty simple. There shouldn't be a reason for you to have to go to any kind of bank. There are also a lot of companies online that are now trying to compete for your business and your loyalty. So consider checking out like Quickboooks or Cabbage. There are a ton of these that are offering PPP loans. Maybe even just Google PPP loans. But I did apply through Chase and Veem. Now, you're not supposed to have to front any kind of collateral or sign a personal guarantee. You also get these loan payments that you're supposed to make on this loan deferred for between 6 to 12 months, and the loan carries an interest rate of 1%. Now, even though the interest rate is just 1%, keep in mind you are going to be responsible for paying the interest on this. So let's say you take out a $50,000 loan and you pay it off after 1 year, you're still going to have to pay about 1% in interest, or around $500. I think the actual interest rate most of the lenders are using, it's what Chase used when I applied, was like 0.98%. And heads up, if you're thinking, wait, do I qualify for this if I don't have employees? As long as you have a small business, and you've ever 1099'd anybody, like a CPA to help you, or an advertising person, or somebody else you've 1099'd, and you actually can show that you have a small business, you can apply for the PPP. Obviously, your loan amount's probably gonna be smaller the less employees you have, but remember, if you have a small business, you are your own employee, so you're always one. Sole proprietor, you're a 1099 contractor, you're an Uber driver, you are your #1 employee. And then we go on from there. Now, let's say we're good with this. We're up to date, we know what the loan is. What are the downsides? Well, here are the 5 big ones. Number 1, let's say you apply for the PPP and you get approved for it, but you've already laid off employees, or you've furloughed employees, or you've otherwise reduced your headcount. Well, the PPP forgiveness rules establish that you have until June 30th, 2020 to reestablish your employee headcount, or else your loan forgiveness amount might be reduced by a ratio of your employees. Now, the ratio is a little bit complicated. I'm not going to go into exactly what this is, but the most important thing to know is if you have less employees today and you take PPP money, there's a chance that not all of that money will be forgiven, which means you're taking on a loan that you think is going to be a forgivable loan, and you might end up getting blindsided into, well, crap, I didn't realize I only had until June 30th to rehire everybody or bring my headcount back to par. Otherwise, my principal reduction, aka forgiveness of that loan amount, is going to get staggered down. That sucks. That's the big downfall number one. So number one, make sure you get your headcount back up to normal, or if you can't bring it back up to normal because you're fighting with your employees and your employees don't want to come back because they're collecting $600 to $1,200 in unemployment checks every single week, which I guess you can't really blame them in certain industries for not wanting to come back. But if you're fighting that fight, expect that you might not have your entire loan forgiven. So be very, very careful with this. It's kind of an irony of what's going on in the world right now. Number two, the CARES Act is very clear that if you do not document your expenses or how you spend your forgivable loan, your loan will all or in part not be forgiven. So my recommendation for this is obviously if you have really good accounting standards, perfect. You know what, this should be no problem for you to be able to track your expenses. But personally, a recommendation that I've been thinking about doing is opening a completely separate business banking account. Any kind of loan proceeds from the PPP go into that bank account. And every single transaction with that bank account better be a qualified expense. So that way I could simply say, here's an export of 2 months of bank statements. Every single one of those expenses is a qualified expense. Here's the documentation supporting every single one of those expenses, and that's it. Anything related to that loan comes out of one account. Now, I know you could set this up obviously in Quickbooks and you can do accounting magic to separate these things, but to me, it costs nothing to set up another bank account. In most cases, you could do it for free online. Heck, I'd like one off the top of my head, you could go to M1 Finance, but you know what, even like Chase these days, you could open up a bank account online. They've got little features for certain business banking clients where you can open up a bank account online or just call them, open up another business bank account. Why not? My POV on this. So number one is making sure you get your headcount back up. Number two is making sure you really clearly delineate where that loan money went. Make your life easy because I'll tell you, none of us like audits, none of us like doing the books. Unless you're an accountant, and obviously if you're an accountant, you probably don't like doing the books either. Yeah, we all get tired of doing the books, so make your life easy. Okay, number three, make sure you've got a very, very clear outline of what the qualified expenses are. And you gotta separate 75% for payroll and 25% for other. I'm gonna go through the CARES Act right now and show you what those qualified expenses are. This is the actual CARES Act. It says here that allowable uses of covered loans, AKA the Paycheck Protection Program loans are, number one, payroll costs. This is that 75% portion. Payroll costs is kind of like an umbrella term that shall include costs related to the continuation of healthcare, paid sick medical, family leave, health insurance premiums, employee salaries, commissions, or similar compensation. I believe, and you want to check this, but I believe tips fall under similar compensation, but I would ask your lender to verify this. Although I have to say a lot of lenders are saying, oh, call the SBA, ask them. So they're kind of throwing their hands up on this. And on top of that, like the Chase loan agreement actually says, if somebody tells you something on the phone that's different from what's in the loan agreement prevails. So read your loan agreement terms, but this is what the actual bill says. So this is this right here, this upper part here, this is payroll. Now, just a heads up, I believe that state and local payroll taxes are considered under payroll costs. The Treasury Department released guidance on this. However, federal taxes are not included in payroll costs. So like the amount of dividing out that you have to do here and really like good accounting is incredible. If you're an accountant, you're like, come on, Kevin, that's easy. Like I could do that really easily. I'm just saying, if you're like a normal small business owner, a lot of this stuff is overwhelming and get a separate bank account, in my opinion, to make this at least a little bit easier. And then in theory, you could even pay payroll, in my opinion, out of your normal business account, then look at the payroll statement and then just reimburse yourself from that loan. Okay, state taxes reimbursed. Okay, the actual underlying net pay reimbursed. Cool. I didn't reimburse federal taxes. See SBA, now forgive my whole loan. Make your life easy, folks, because this is gonna be a massive cluster F when it comes time to actually get forgiveness otherwise. All right, the other portions, this is the 25% part. Payments on interest on any mortgage obligation. And I believe you had to have that mortgage prior to February 15th. The Treasury Department had some guidance on that as well. Same thing goes for having an active lease agreement, utilities, and then interest on any other debt obligations that were incurred before the covered period. This is the actual text of the CARES Act. What I'm going to do though is I'll link down below another video that I made on the PPP going through the updated Treasury guidance. But let's now talk about more of the pitfalls of the PPP. This gives you a really good outline. Just remember, you're separating that 75%, 25%. Want more details? Link down below. Otherwise, I think we're good on this topic. Let's keep going on the risks. So obviously you want to be very, very careful with these qualified expenses. And here's exactly why, because this is a nasty, nasty pitfall we're not thinking about right now. Let's say you take out a $500,000 PPP loan and you're struggling to get the business back up and running, you're stressed out as is already, and you don't set up a separate bank account, and you just start spending the money, and all of a sudden you apply for forgiveness, and it's right before you have to start making payments because you forgot to apply for forgiveness, and then, oh crap, I took out a $500,000 loan, you get your decision in, and they say, hey, we're only gonna forgive half your loan. Oh, by the way, now you have to start making payments. Well, this is what that looks like. This is pitfall number 4, a really nasty payback period. Right now, all we hear is it's 1% interest. Oh, cool, I can pay it back. I've got 2 years, all good, no prepayment penalty. Yeah, but watch this. This is a simple loan amortization table here. And let's say you had a $500,000 loan and you had your payments deferred for a year. Some people are getting 6-month deferral, some are getting a year. So we've got a 1-year term to pay this money back. We've got an interest rate of 0.98%. It's slightly under 1%. And we'll start repaying it, we'll just say right now. But let's go ahead and put in a loan amount. So you took out a $500,000 loan, but only $250,000 of it is going to get forgiven. So you have to repay this, let's say $250,000. Because you have to repay this all within now 1 year, because the loan is due within 12 months after that first year, in other words, the loan is due within 2 years, look at how nasty the payback is. Calculate. You would be paying $21,000 per month to pay this thing back. Let's just put this into scale. If, let's say you borrowed $50,000 and half was forgiven, and I had to pay back $25,000, just to try a smaller number because this is pretty overwhelmingly large, but it's true. If I had only half my loan forgiven and I had a $50,000 loan, I would all of a sudden have to start making payments of almost $2,100 per month to pay this thing off in a year. This is a lot of money. The amortization on this sucks. It's not like a house mortgage where it's 30 years. It's 12 months. After your 1-year deferral, it's 2 years total. That's scary. So if you don't properly account and you don't get your loan forgiven as much as you think, you're gonna have a fat payback. Now, the 5th thing that's nasty about this is the SBA and these lenders, and at least Chase did, in their loan agreements, put in a right to sue you if you default on the loan. So even though they say there's no personal guarantee and there's no collateral required, Chase put into their loan agreement that they have the right to sue you to collect on this loan. And I'm thinking to myself, you've got to be kidding me. This is being advertised as a forgivable loan, but if we don't restore employee headcount and we don't 100% properly account for all these like crazy different definitions and 75% here and 25% here, they have the right to sue us? Even though this is advertised as no collateral? Like what? Are people now gonna have to file bankruptcy? Which if you file bankruptcy, your loan automatically goes into default. That's also in the loan agreement. It's kind of nasty. Now, downside number 5 with the PPP is twofolded. Number 1, in my Chase loan application, it says that I'm only eligible for 1 PPP loan between now and the end of 2020. And unfortunately, the second part of this twofold, the PPP is only established to help support you for 8 weeks. So that means if you apply for the PPP, you're going to get 8 weeks of coverage and pay, but you can't apply for the PPP again, which means if you've closed your business and now you rehire your employees because you got money for 8 weeks, what's gonna happen at the end of the 8 weeks if we're still under lockdown? So this to me is a personal decision that you kind of have to think to yourself like, okay, I'm only getting 8 weeks here, and according to a lot of the loan terms, I'm only going to be able to apply for this once. Is this something I wanna get tangled up with for 8 weeks? Now, a lot of us don't have the choice. Like, we need this, we have to, which is fine. But realize that it's an 8-week life support. And I guess unless they change the rules or pass some new laws, I potentially see this as an issue. Last problem. This is probably the bigger one out of all of these. I mean, we've got lots of problems so far, but problem number 6 is when you request for forgiveness, the lenders have 60 days to get back to you. So if you wait until the end of your deferral period to request forgiveness, expect to make 2 payments on your entire loan before you even hear about forgiveness. And guess what? When they say they have 60 days to get back to you, I wouldn't be surprised if the lenders are gonna get inundated with these requests for forgiveness, that at the end of these 8-week periods where people start requesting for forgiveness, the banks might take 59 days to respond to you and then say, by the way, we need an update on this, we need clarity on this, we need clarity on this. So it's quite possible it could be 2 to 4 months before you actually hear on forgiveness, which a lot of us are only getting 6-month deferral periods. So my big recommendation is, as soon as your 8 weeks are up, stop using that separate bank account you made and immediately request forgiveness ASAP. And get in that forgiveness line right away, because otherwise you could get stuck. And we saw that amortization period is nasty. So be careful out there, folks. Thank you so much for watching this. If you like this video, make sure to subscribe. Get your 2 free stocks with Webull if you deposit just $100. Join me in my amazing real estate courses where I teach you how to buy below market value real estate, coupon linked down below. And of course, get your free quote for life insurance, which you can do on your phone in under 5 minutes. Times right now are crazy, and I'm trying to sign everybody in my family up for it. Thanks so much again for watching, everybody. Have a great day.